The acquisition was foreshadowed as part of the entitlement offer of June 2017. RFF is now pleased to announce that we have contracted to acquire 3 adjoining cattle properties due to be settled in December. The properties are located in Northern Queensland, approximately 225 kilometres southwest of Townsville, and includes both breeding property as well as finishing or fattening property. The transaction of the properties are valued at $53 million. However, this is part of a $72.5 million transaction, and the balance is broadly for cattle, CapEx to improve the value of properties, as well as additional security arrangements for our investors. The Natal Aggregation, or as we refer to it, Natal, is a sale and leaseback type transaction. The lessee is an entity, DA&JF Camm Proprietary Limited, the directors of whom are part of the broader Camm family, an intergenerational Queensland cattle farming family who are part of the Camm Agricultural Group. The Camm Agricultural Group operated integrated cattle farming business and have 9 properties within their portfolio, including the 3 that RFM has acquired and is leasing. Also, it is important to note that the lease term is for 10 years with a market rent review at year 5. Yes, and this is one of the key reasons why we were attracted to Natal. The properties encompass some 390,000 hectares, and of that area, 150,000 hectares is breeding country which would benefit from the deployment of additional water points as well as CapEx deployed on fencing. So RFF has a budget of $2.5 million to spend over the next 2 financial years for those identified capital expenditure programs. We're aiming to uplift the carrying capacity of the properties as a consequence of that by some 36%. The carrying capacity of those cattle properties is one of the primary determinants of value, and hence we've included within the lease a market rent review at year 5 so that any capital growth as a consequence of these capital expenditures can be monetised through that rent review and forms additional cash for our investors within RFF. In addition to that stage 1 development, there are extra areas which we could improve via pasture improvement as well as cultivation area, and we're yet to agree those with the lessee, but we're optimistic as to the prospects of improving the carrying capacity through these quite simple development programs. RFM has continued to articulate a strategy of continuing to diversify the rural funds group, both climatically and by sector type. The acquisition of Natal will increase the exposure in terms of geographical spread into Northern Australia, as well as expand the cattle sector within RFF. It will now be the 2nd biggest sector within the portfolio by value and contribute approximately 11% to FY18 forecast revenue. The overall size of RFF has grown as a consequence of the entitlement offer as well as the subsequent acquisitions, and adjusted total assets are now have gone from $588 million to $660 million. RFM believes this is important for continuing to grow the liquidity for our investors to enable them to trade in and out at RFF if they choose to. Finally, the transaction has also led to RFM increasing the adjusted funds from operations guidance, which is the free cash flow that RFF generates, from 12.5 cents per unit to 12.7 cents per unit. Distribution guidance remains unchanged, being a 4% growth between FY17 and FY18.